No audio? Nothing? Yes? As in not, it doesn't work. Okay, it doesn't work. I get it. Okay. Got it. Wait. Now, yes? That's weird. Okay. If that was the case, all I did was... Oh, weird. Okay. This is a weird way to start, but if we're good on the AV, honestly, all I did was I pulled myself back on the screen, and I guess that's what kicked up the volume for the primary share. So I guess we're good. Okay. All right. We're good. We'll stick with this. Okay. That was annoying. So let me just start the whole thing over again. That's really stupid. But Pulver report. Hey, everybody. Happy Friday. Risk disclaimer: stands risk in trading. Please don't always use trade capital only. Do not trade with money you cannot afford to lose. Whether trading stocks, options, futures, forex, cryptos, you know the deal. Yes, let's get rid of this. Okay. So here's what I was talking about. I was talking about the 10-year yields. I was talking about the Fed. We're at 4.28. Look at the Fed watch tool. So I'm just recapping in 2 minutes what I talked about and wasted time on for 10 minutes. Okay. What I was saying was 75 basis points hike expected for November, 75 basis points hike for December, 25 expected for February, and another 25 for March. Now, this keeps going back and forth. Okay. Are they going to raise rates in March? Are they not? This is the Fed. The hawkish tilt stands. CPI is coming down super slowly. And what I was looking at is possibly timing the top in yields and timing the bottom in equities is probably if these yields, and we'll look at the 2-year, look at the 10-year, if they actually get up to these numbers. You know, this is essentially where the market is saying, okay, the Fed may stop raising rates around 4.75 to 5%. And if they are there, that could be where the equities market starts to see some lows. So what I was looking at is simply the 10-year yield. We're at 4.3. Could it go up to 5%? Yes. So if it does, do we have another move higher coming? Once we get to 5, is that enough to say, okay, it hit the target, we can put in a top, we can start making lower highs and lower lows on the yields, and then probably a 1 to 2 to 3 month lag, maybe 2 to 4 month lag, we might see the bottom coming in equities. Right now, if you think about the timing of that, the Fed with 2 rate hikes by the end of the year puts us at 3.75 for November, and by December we'll be through the 4% target. So it doesn't look like Q4 is going to be very pleasant if the Fed is still dominating the market and equities is going to have to see some type of bottom based on yields. Because if we're going to keep seeing a higher interest rate from the Fed, there may be some indecision here, and the market may rally kind of to the chagrin of the Fed raising rates. But I wouldn't be surprised if we start to see another flush lower as the Fed, or even those rates, you look at the 1 year, the 2 year, the 5 year, the 10-year, if they keep creeping higher, I wouldn't be surprised if the market also creeps lower. Now, past resistance becoming support on the SPY is 340. Past resistance becoming support on the Qs is 240. That's a good technical spot to look for a short-term bounce. If we capitulate any lower than that, that's fine. I'm still looking for buying opportunities on the SPY around 320 and, of course, a round number at 300. So 340, 320, 300, I know those are all very different targets, but the reality is I'm still going to look for buying opportunities. Okay, so I'm keeping most of my exposure with options. So if I'm risking anything, it's all calculated risk, and it's pretty small versus, riding shares to the downside. And from there, I mean, Forex, you look at your currency strength chart for today. I mean, the dollar's having a massive drop on Friday. That's pretty interesting. The dollar's also dropping. You have the Aussie and the New Zealand jumping hard. You have the yen also still getting weaker, though. So that's not good, right? I mean, what was interesting this entire week, let's go to yesterday. So the entire week, look at how the dollar yen has behaved. Dollar yen together, dollar yen together, dollar yen together, dollar yen together, and we start to separate. And then this morning, huge separation, right? Dollar massively strong, JPY right at baseline, and now we're seeing the dollar drop. We're also seeing the JPY drop alongside with it, and still having some weakness. So on that note, let me take a look at the dollar yen. We're at the 151.80 mark this morning. Oh, we're now 151.56. Crazy overbought conditions. I do have some scaled levels in at 150, 250, 155, and 160. I talked about it this week in the flex room. We have a crazy high, stupid, ridiculous bar count, but doesn't seem to be stopping much right now. Okay, Craig says the SPY bullish for the first 3 days of the week and bearish the last 2 days. Yeah, it doesn't matter, because if you join me on Monday, what did I say on Monday? I said on Monday, if we're watching a couple levels, you watch the CPI low from last week, and then we had that Monday high. So we had a gap higher right there, this low, this high. I think for the next couple of weeks, we just wait and see. You know, if we don't break this high, we don't break this low, all this is volatility. You know, there's real no movement in the SPY, and therefore it's kind of hard to judge to see where the bulls or bears are going. But bulls break the highs. Let's have a conversation about that. Bears break the lows. Okay, fine. I'm getting ready to gear up for those 340, 320, 300 lows to start looking for the rally. But if I'm watching one instrument, if you go to youtube.com, so youtube.com, and we should have a video dropping this afternoon, hopefully. I just have to finish the edit. But for my Beyond Capital Group channel with Jared Johnson, little hedge funds, this group right here. So, all right, we got about 20 extra subscribers this week. Excellent. We're going to start to, we're dropping a video that's really just watching one thing, and that is the rates. You watch the U.S. yields, you watch the 1, the 2, the 5, the 10. We focused on the 2-year yield for the video, but we start watching those, and that I think that's what we can start to see as the timing of where we see a peak in Fed fund rates and a peak in yields, and then the yields will lead the way. If yields lead the way with lower highs and lower lows, probably within a 2 to 4 month window, we should see the equities market bottom. Of course, technically looking at the bottoms, I mean, I know I have a ton of stuff in my chart, so bear with me. But from this high to low, pull back, lower high to lower low, pull back, lower high to lower low, I think we're close enough, close-ish to finding some technical lows. Now, I'm not saying the low, but I'm saying technical lows. So, you know, the fact that this is Q4, you know, we're only a couple weeks away from getting into November. We have a rate hike coming on the Fed from November 2nd. We have the midterm election November 8th. You know, the market's going to use that window for something, whether that is, oh boy, more hawkishness from the Fed, here we go, and the market dumps again, or, okay, the Fed's raising rates, we know where it's at, we'll start to price it in, and then the midterm election, whether it's a surprise or not, maybe the market reacts a very opposite way. Okay. So I think that, you know, watching price this week, I mean, we didn't really make any substantial progress above or below. So I think going into the next couple of weeks before the rate decision, November 2nd, before the midterm election, we might be stuck inside these levels for a couple of weeks. Okay. One instrument I was looking at this week with my Equities on Demand students, we were looking at the XLE. I did a $95 long call out to November 25th. I'm looking at this energy play just to see if it's going to continue to push higher. If it is, then we break this high. We start making our way back up here to 90 and 92.50. That's going to be a pretty lucrative long call, and I only paid 80 cents for it. So I'm willing to risk the 80 cents for something like a $5 or $6 credit. But if I'm wrong, I'm wrong, and that's no big deal. That's why we take, you know, a trade and it's calculated risk. But if we're right and we see just another big push on energy and U.S. oil has a pop, I know that the U.S. dumped about 14 to 15 million barrels into the markets this week, or talked about it. So whether they get permission on that, they're also looking at a price floor around $70 to $72. So I think if they keep dumping the strategic petroleum reserves, they're trying to get something like flooring out oil around $70, and then they're looking to, you know, buy back. And that price floor, you know, I don't know if we just like load up at $70 a barrel and try to get, you know, major U.S. energy companies to start producing like crazy. It doesn't work that way. You know, it takes years of infrastructure to get these supplies in order. It's not just overnight. So this whole energy situation feels very poorly managed from the U.S. side. And the Fed, meanwhile, is kind of making the whole world feel like, you know what, who's the reserve currency of the world? Who is? We are. And it's like, it's crushing so many countries right now. And it's also crushing, you know, multinational corporations that are getting hit by this exchange rate. The strong dollar is not good for the global economy. It's good to show that the U.S. has a world reserve status, This is why we talked about exotic currency pairs this week in Forex. And man, I'm not comfortable shorting the dollar, not yet. So when you see the dollar index rise like it did last night, it's a good sign that we might see a drop in the market this morning. That's true. Yep. So the DXY, but again, I talked about this on Monday. Where do I have chart alarm set? DXY. That must have expired there at 115. I'll set another one. But did we break the highs or lows? Look at this DXY. Did we break the highs or lows? Did we break the high? No. Did we break the low? No. So what does that mean? Well, if we have a top here and a bottom here that haven't been broken, and we have a bottom in the equities and the top in equities that haven't been broken, guess what that means? Probably more of this. Probably more of this until the market's able to, if the dollar penetrates these highs, yes, just like we Daniel, right? Daniel's it's either Daniel or Steve. I think it's Daniel. If we see a break in the dollar to the upside, that should be another break to the lows in equities, more than likely. So truthfully, this week we didn't really see a lot of progress. We just saw a lot of volatility. The markets were mixed. I know that we had some ugly sell-offs yesterday. Tesla dropped quite a bit. At 205 pre-market, and there might be some more pain down here towards that big 50 to 60% level. We have a yearly pivot around 166 on Tesla. So, we might see another flush lower on Tesla. I know Snapchat had some poor earnings. They're trading down to 773. I actually took an assignment on Snapchat, but I'm probably just going to close it for a loss, just in case. I mean, Snapchat might come down here to $5, and my expiration was today. So the broker assigned me, and I don't want to take ownership at $7 or $8. Have this thing drop another $2, $3. So I will likely just manage it for a 45-cent loss and move on. So we'll be talking about that today in Equities on Demand. Okay. So, I mean, again, what are investors actively looking for, right? I mean, right now we're looking to see, is the coast clear? And this is just traders, this is investors, this is money managers, this is everybody. I mean, cash is on the sidelines waiting to be deployed. And yes, I know that Warren Buffett says you can't time the market. I agree with that about 51%. Because 49%, I think you can time the market if you pay attention to it, and you will be, again, for near-term profits, timing the market pays great. But long-term, yeah, I mean, long-term, it's pointless. Just dollar cost average in forever, and you're probably going to be okay. But having said that, there could be, for the next 3 to 5 years, if we have higher rates for longer and we have low growth, guess what this means? This market might be stuck, right? Stocks might be stuck. So we could be entering into environments here where there's not really a lot of good opportunity for the buy and hold investor. So what do I think the alternative is? You have to actively manage your trades. It might be buying lows and taking profit at 10, 15% surges. I mean, if the SPY, let's say we hit 340. Okay, let's say the SPY hits this pre-COVID high around 340. Well, if we hit there and then we jump up, let's say we jump up about 10%. I mean, that's coming back into these June lows. It's a 12% rally from there. So we go from, 340, jump up 10, 12%, come back down, jump up 10, 12%. I mean, you can still build wealth with a little bit of trading, right? You trade support, find a past level support here that becomes resistance, take your profit. If it goes higher, you're still hanging out of trades overall long-term. But if we have to trade with a little bit of a yo-yo effect, then we have to trade it. So I just think that if you're comfortable with active management strategies, you're going to be better off than just the buy and hold. I mean, the next couple of years, it's going to be interesting to see where fixed income goes, because we've seen this deterioration of wealth just by the markets dropping and assets dropping, and everyone's been told, like, buy stocks, it's the greatest hedge. Well, it's not the case. We'll put it in bonds. That's a 60-40 portfolio. That's not the case, right? Your 60-40 portfolio might be historically the worst performance in 70 plus years. Though that's not good. So where do you go? Well, you put money in real estate. You go to arts and collectibles. Sure, you can diversify that with cash. But as an investor, it's like you're just trying to find ways to make money. And I will say this: I don't really have the patience to be buying something and then wait 5 years to get returns. Because where are the returns? I mean, does it take 5 years to reclaim these highs? Is there a complete shakeup where tech is dead and tech is toxic? Is it going to be energy and commodities? And it could be an entirely different sector shift where something emerges way more profitable than tech. I mean, case in point would be ARK this year. ARK is trading at $35 from highs at 160. You mean to tell me that how long are you going to have to wait for ARK to be this representation of disruptive technology to go up 350%? Now, sure, there's a lot of opportunity there, but how long does it take? I could see us, just like we did back in 2002, once we started to see some bottoms after the tech bust. I mean, like Microsoft, one of the greatest companies in the world, went nowhere for 13 years. So are there tech companies that will do that? Probably. Maybe. Is tech in general going to do that? I don't know. Maybe. So I just think here's the deal. Manage your risk. When you have an opportunity to take profit, protect it, be willing to get back in. I just think an active management role is going to be much, much, much better suited for profits in the near term than just buy and hold. I think that traders are, well, I'd say investors for the most part, buy and hold investors are going to be screwed. Now, if, bonds improve or if rates start to go down, I mean, maybe we can get in at, 3, 4, 5% on fixed income. That's fine. I mean, park something in for tax-free, tax-free growth at 3, 4%. If inflation comes down, you're breaking even. It's preservation of capital, So anyway, good stuff. Still riding that dollar yen long. I love it. Or did you just take it short? Probably long, right? We're trading at 150, 150. Yeah, let's see the daily candle. So the yen was going down along with, the dollar yen's not leaving like this long wick or anything. So we are seeing like Aussie dollars jumping pretty hard. Aussie dollar leaves a nice wick to the south. New Zealand dollar leaves a wick to the south. Pound dollar started to jump right off that monthly pivot. Euro dollar started to jump. Dollar Swiss highs around 101.50. We did go long this week on the. We're up about 50 pips right now, and we'll see what it does. I mean, I'm still going to hold this as a bit of a hedge because I'm also long euro dollar. Even if my dollar Swiss drops back down here, I'm just going to buy some more and trade the range. But if the dollar Swiss drops, then that should help my euro dollar position get into better profit. So that's a little flex trade from this week. What else are we in this week? We're looking for a bounce on the euro New Zealand. So we had a bounce on the euro New Zealand. We got filled at 71.75. We're at 72.60 right now. So that's up. I mean, that's up about 100 pips. We were up this morning about, almost 200 pips. So we'll take a look at that one. Let me see. I might just grab some profit and take, it's up 90 pips right now. We'll see. So anyway, let me take a couple look at some other instruments. U.S. oil. If we're going to keep dumping our strategic reserves out there, that's going to suppress. China's still on lockdown, so demand is lower. But I do think that a floor is coming, and probably a crazy strong floor around $75 to $70. And we may not even get there. I mean, this is such a ridiculous effort to lower the cost of oil, to lower the cost of gas at the pump, to lower the cost of energy in general. I just don't know how much longer you can force this to the downside. Look, the world needs to consume it. The world is still dependent on it. And you can't just go from a carbon economy to a green economy overnight. Clearly, that's been the case. COVID certainly didn't help. Russia-Ukraine war hasn't helped. And it's still going to be a really interesting situation to see how energy plays out. But I was actually surprised to see that we didn't have more upside. There's not really some buying interest yet. There's no volume popping into the market. But we still haven't taken out the lows, and we still haven't taken out the highs. So I'm looking to see what happens first. UK oil, that's Brent. So I can go UK oil. Same thing, similar structure. Gold and silver, because the dollar has been making a run. Gold is back down to the lows. If these lows hold, we might see a pop on gold and get back above 1676. Again, there's my high, there's my low. Neither level's been broken. So as we go into trading next week, these are the levels we need to watch. Silver, there's my low, there's my high. Levels haven't been broken. Bitcoin. Mostly inactivity on Bitcoin, but we're struggling to take out 20K. If there's no risk on rally, then we're really not going to see probably 20, 21, 22K in Bitcoin. We're probably going to be hovering around this 18K. We might even be vulnerable to the downside. Snap at 9, ACI. What, dude? Oh, geez. So Albertsons, after that little rumor mill of Kroger buying them out. Oh, my Lanta. You got to be kidding me, dude. 2069 on Albertsons? What the fridge, man? The heck is that? Did they just have earnings overnight or this morning? That's ridiculous. Albertsons. October 18th. That was this week, and it was beat expectations. What the fudge? That is wild. Well, so much for repairing this trade. And that Kroger rumor. I mean, it's still possibly true, but holy shnikes. Unless I got shot down. Let me see KR for a second. 42.25 on Kroger. Man, ACI is getting smoked right now. That's wild. Well, those are my shares. I suppose I might look at some fresh credit spreads, see if we can fill. I mean, that's a pretty big gap I'd like to fill. So, 21 by 20 maybe, going back into 24 for a recovery. If we go down to 18, down to 16, it's probably worth taking another chunk of shares there. But man, that is being punished. And it beat earnings on top and bottom. So that's weird. But it is what it is. I'll set a chart alarm here at $20, and we'll talk about this at the top of the hour for equities on demand. Wow, that's a big jump. So Albertsons right there at 20.64. Snapchat is trading at $7.99. Like I said, I got a sign from the broker. It may drop a little bit lower, but my expiration is today. The broker already assigned me. So I don't really have the time in this one to take assignment. So I'm just going to take the loss for 45 cents and not worry about it. I can do that this morning. I can close out the shares, close out the long put that we have, and manage this for about a 40 to 45 cent loss, which is okay. And we still have other staggered credit spreads in case there's a return. If we do dip down here into the $6 or $5 level, I'll probably throw a few more credit spreads at Snapchat. All right. Paul, we took a look at those. Yep. So silver and gold haven't broken the highs or lows. So there's just more indecision. The market itself, you look at the SPYs, look at the Qs, haven't broken highs and lows. We'll go back to the daily time frame here. So lows from CPI last week, highs from that Monday gap higher. The market's still relatively contained. We only have one full week of trading left. One full week of trading for the month of October. We wrap up on the 31st on Monday, and then the second Wednesday, right? The 2nd of November is the Fed rate decision at 2 p.m. So the market may do a lot of nothing for the next couple of weeks and just be jockeying and neutral going into that Fed rate decision for November. Clearly October has failed to kick off Q4 with a bang. We tried, but it's been, the efforts have been pretty much punched right in the mouth afterwards. So it's still a bit of a struggle right now. And I don't think that the tone of the Fed is going to change much. I think what likely the case will be is we have to watch those yields. If those yields start to creep up to 4.5%, 4.75%, 5%, watch the dollar index. But once we start to top out in yields and start to make lower highs and lower lows, we are looking for, decent bottoms to form in equities. But most likely the Fed will not just start cutting rates. I mean, I want to make that very clear. I think that the whole world thought, the Fed's going to raise rates, they'll cut rates. I think the Fed is going to raise rates, and then they're going to pause, and they're going to keep rates higher for longer. Because the alternative is, and I literally just listened to this on BR yesterday. The alternative is that we raise rates to an ungodly percentage, like 8, 10, 12%, and we just break the entire global economy. Because that's what we did back in the 70s, right? 70s, 80s, late 70s, 80s, when it was crazy high inflation. Paul Volcker just jacked up rates to 12%. And that was his legacy, but also it worked. Inflation went from 10, 11, 12% down to 3% within a year and a half or 2 year period. But it broke everything. And so I think the softer landing, and again, it feels like soft landing is impossible, but the softer landing might be higher rates for longer as opposed to shock to the system. But we clearly are seeing that inflation is coming down super, super slow. And this just feels like a death by 1,000 paper cuts. We just keep making lower lows, lower lows, lower lows, lower lows. Look, at some point, the market's trying to rally. And I think that rally has a lot to do with where the U.S. yields are at. So if we watch the 10-year, the 10-year yield at 4.3, if this thing creeps up towards 4.75 or 5%, that's essentially where the Fed is supposed to be maxing out. So if we max out there, start to rebalance, then I'm looking for a bottom to start forming in equities. but that means there's potentially more upside for these yields. That means there's potentially more upside to the dollar index. And we'll just have to watch. It's a combination of watching currencies, yields, and then correlating those with equities. Okay. So yeah, and on that note, I mean, energy is still a wild card, and materials is a wild card. I mean, if we're going to increase energy consumption and increase energy production, it takes materials to do that. So that's why I'm playing energy and I'm playing materials. So CLF, for example, stock is trading at 1548. I actually have a cover call this week at 1550. I would love to see this one called away. Actually, take that back. I rolled it to next week for what did I do? I rolled it out. Let me check my notes here. I rolled it to next week and grabbed another 53 cents in credit. So I rolled it out. Yeah, 1550 covered call. My break even is now $12.16. So I lose it for about $3.34 out to next week if it stays above $15.50. So CLF, I'm long. United States Steel, we're long. Alcoa, I'm getting long in this area. We have a bunch of credit spreads. We're taking a loss this week in Alcoa at the 45 by 40 or the 50 by 45, but we have other ones for this thing to jump. Some other ones, CDE. I might actually lose the stock this week about $3. Hooray. I'll make about 80 cents a share. So not bad by using options and working your costs down. So there are some stocks that will get called away. NCLH I lost last week for profit, or got called away for profit last week at 14. What else? TAL. I don't think this one's going to get called away. TAL is trading at 389. This one's covered out to the 20th. NCLH got called away. CLF hopefully gets called away next week. XLE, we'll look at that call trade. Okay, so enough about that. I'll talk about that more at 10 o'clock. Any other questions for me? Sorry about all the AV issues in the morning. Clearly, I know that when I'm working on this laptop that I've got to have my face in here. That's what brought up the audio. By the way, how is the audio? I don't even know what I'm talking on right now. I feel like my audio is through, I think it's through the computer. Let me see if I'm going to change it real quick. And
let me know if this is, can you still hear me? Type in a word, yes, you can still hear me. Okay. This should improve the audio quality a little bit. This is through the headset, which is noise canceling. But if it was okay, that's good. I'm just glad we fixed it. So I was running out of options. I'm like, okay, computer audio, webcam audio, headset audio. I'll talk through Benji. Anyway, any questions? Any other charts you want to take a look at today? Now you're talking through the mic. This is worse. Is it worse? It was better before? Okay. Hang on. I'll go back. That's weird. So let's do this.
Try this. Is this any better? I'm just curious. Sounds better before. No echo now. I'd say not worse. All right. Well, it seems like today was a bit of an AV experiment. All right. Let's take a look. Yeah, dollar yen. Look, I mean, the reality is if your dollar yen alignments aren't changing, you got to stay long. And I'm saying that as a trader that is literally short the dollar yen. I just know that I'm in the wrong by fighting this stupid currency pair. And I told traders this week, here's my plan. My dollar yen, these are my entries, and I'm starting to stack up. I've taken some losses. I've reduced my trade size a lot. My break even is 140.14. Now I'm willing to take this ride, and this is probably dumb, but I'm willing to take this ride up towards 160. So my next entry right now is 155 and 160. And I this is a group trade that's pretty small. This is like one mini lot, right? It's a little bit more than that. It's probably like 0.15. But it's not a big trade size for me to ride this thing a little bit longer. And then this red line is my break even. This will move up a little bit. If I get filled at 155, 160, this line's probably going to jump up to 145 or closer to 148. I truly think that when and if this is done, we are coming back down to this red ribbon and 200 EMA, and I'm going to turn this into profit. So I'm willing to be stupid enough to ride this out a little bit longer. If you're a bear, you have no reason to sell it outside of hoping it goes lower. And like I said, I'm telling you this as a trader that has been short the dollar yen. But traders know also my decision to stay short has cost me money on the way up because I've been taking losses. I've been scaling out, scaling back in, and I'm essentially just deciding to maintain a group position for a bigger trade. So right now, if your alignments on your smaller timeframes are giving you bullish signals, then continue to buy the dips. You can look at something as simple as if it bounces off a daily pivot, look to buy it. If it gives you a trend line, if you look at automated trend line support, look to buy it. I mean, it's like everything right now stays bullish on the dollar yen until you start to break these, aggressive trend lines. And right now there's no end in sight. I think that we could go to 155, 160. We talked about this week in Flex. You look left on this chart, the last major high. We're at a 30-year high, by the way. Just want to make that clear. We're at a 30-year high in the dollar yen. We broke the highs back here in 1998. And we are higher, or we're potentially coming back to this high back in 1990. This is a 160 high. So could that be our next spot? We're at 151. Are we going to go another 800 to 900 pips to the upside? Maybe. If it's unrestricted, maybe. So the timing of all this will be pretty nuts. All right. Solana, I don't know, man. What is it? It probably looks like every other crypto. What does it look like? Probably a whole lot of nothing. I mean, look, crypto is just, it's dead right now. I mean, there's very little volatility. Bitcoin sideways, Ethereum sideways. If there's no risk appetite, crypto's not going anywhere. And, in my own kind of selfish way, I wouldn't mind looking to see if there's more risk off trading. I wouldn't mind seeing a little more of a discount. I mean, 18,000 might hold, okay? But if we have 18 or 15 or 12 or 10, I'm going to scoop up some more Bitcoin at those levels. But right now, 18 seems to be holding pretty firm. We're kind of oscillating. But for the last 4 or 5 weeks, very dormant price action on crypto. And that may not be a bad thing. If we see that the equities market's making fresh lows and Bitcoin's not, I know your Bitcoin enthusiasts are like, see, it's starting to separate. But I mean, it's a good thing if it's not making fresh lows compared to the equities market. But I think in order for the equities market to bottom and have a sustainable bullish rally, just like I have here, Bitcoin rallies contingent on dollar weakness and equities rallies contingent on dollar weakness. The rates from the Fed have to top out and have to start making lower highs and lower lows. The dollar has to top out and start making lower highs and lower lows. Without that happening, Bitcoin's not going anywhere, and most likely the equities market's not going anywhere, right? And it's going to be about energy. It's going to be about, maybe materials, copper, perhaps, gold and silver, maybe. But I mean, your 60-40 is not working well for a hedge. Gold and silver aren't a hedge against the dollar. It's like the dollar's been the king of all kings this year. And that's usually just, it has crazy ramifications for the global economy. And again, I think this is an interesting power play to be like, we are the world reserve currency, but it also might force the world to start looking for alternatives, because the stronger the dollar gets and the stronger the dollar has been, the harder and harder it's been for everything that's priced in dollars. Everything is more expensive and countries are experiencing the same type of inflation or worse than what we are. So I feel like this has ramifications where, the dollar might enjoy its win right now, but you're going to start to see countries looking to do a lot of things to get off of dollar denomination. So we'll find out. Got my hands burned shorting dollar yen. I ain't touching it again. Yeah, no, that's, I've said this for years too, and Nimmer, that. I probably made more money in the Forex market by never trading the yen in general. And this year I decided that, I thought we had good technical setups, and that was my error. Technical usually works in Forex, but sometimes when we have these fundamental macro moves, the yen doesn't respond to technicals. Now, having said that, did we see a dollar pattern, the dollar yen pattern? Yeah, you look at a higher time frame, it was a crown, it was a head and shoulders, and so we're getting this break. And we were long in here. I mean, I gave a lot. I fought this way too long. I mean, we were long in here. We got long around 110, took it up towards 120, and then I started shorting to 120. I thought I could take a 120 and then start to short it here at 124, be okay. Clearly, that didn't work. So the good thing is trade size, but I've taken losses along the way. This has been a pretty ugly year for my position trading. It's been a great year for my robots. My robots have been crushing it this year, but it's been a terrible year for my bigger position trading. Now, that being said, I still think that my Euro Swiss is going to be in good shape. So Euro Swiss is trading at 98.58. We're making some slightly higher highs. We're creeping up into some fresh highs, which is exciting to see. We just scored a point today by those bulls, so that's a good sign. So now I'm going to look for, if we have a bit of a pullback, if we go from this recent jump and we pull back into an equal low, I'm going to look to buy some more Euro Swiss. My target here is this little pocket. That's an SNB pocket, Swiss National Bank pocket, 102.50 to 103.50. We also have a yearly pivot up here at 106. So way less volatility on the Euro Swiss, actively looking for a bottoming formation, trading back to a liquidity pocket. And that's a position that, pays pretty nicely. That could be, on my account, probably about 5%, which makes up for a lot of those little paper cut losses on dollar, yen, and other currencies. So I'll just continue to monitor all that stuff. Okay, silver supply running low, has to go up at some point. Yeah, I mean, look, silver's a good trade. I think SLV is a good looking trade. Medium term to long term. I mean, look, you have to be ready for this. If the dollar does not give back any strength, if the dollar continues to stay firm, then silver might come all the way back down here to the lows around 13. This is SLV. So if we go from low to high, I looked at this entire structure as corrective. So you have a low, you have a high, that's your impulsive wave. Now, if this comes all the way back down to these lows again, it's still a corrective wave, but we might have the market, the target would be the highs again instead of going higher, right? And that's still a good trade. I mean, if you're able to get silver at $14 or $13 and it jumps back up to $26 or $27, that's still a fantastic trade. So silver is one of my larger positions in my portfolio. My break even is around 18 bucks on SLV. So I'm not that far off. And if we get a run into, 26, 27, maybe we start to go into some fresh levels where this becomes a symmetry play. If this is low to high and we have a higher low to higher high, taking this up towards 30 plus, there's room for this thing to run to 40 plus. But again, right now I just sit and wait because it's been a lot of indecision the last couple of months. Okay. So that's it. But I like silver a lot. I think silver is a good play off the lows. I think if you're watching copper as well, copper has some potential. A lot of indecision right now. Copper is kind of a 50-50 at this time. We have some indecision. Copper could start making a run to the upside, or we could still finish this trade back down to these levels here around 250. I think that copper does have potential there, 250 to 5. But I had an interesting angle on this where, copper is in everything. It is in everything. It's in houses. It's in, chips and semiconductors, phones, computers, everything, right? Copper's everywhere. But mining it almost has diminishing returns. It takes so much work and effort that it's becoming more and more expensive to mine and procure that I feel like there may be, I don't know, maybe in order to make it or find an alternative for it, that it ends up getting phased out. And electric vehicles, I mean, crazy amounts of electric vehicles involve copper, and they involve lithium and other materials that are just proving harder and harder to mine and procure. So I feel like the entire EV infrastructure might change, in order to make it sustainable, because otherwise, the whole world's like, we want EVs, we want electric vehicles, and it's just ridiculously expensive to have one because all the materials to make the batteries are just ungodly expensive, So, I mean, I'll ask you this. A car that was $30,000 a couple years ago is now an electric vehicle and it's $60,000. Is that what you want? Was that a smart decision for a consumer? Is that just inflation? It's like, that's crap. An F-150 now is anywhere between like $60,000 to $100,000 for a truck. It's like trucks, they would like give them away. Like, oh, you can lease it for nothing down and $299 a month. And it's like, where are those days? So anyway, copper is going to be an interesting play. I think there's upside here. I like the technicals of copper. We have really strong channel support. So that's why this kind of 50-50 zone, if we came back down to like 250, pretty interested in long copper there. But this also is an inflation play. I think we still have to be kind of pro-inflation as a pro-hedge. Because if we have risk off trading, it's going to be all about raw materials. And I think that, realistically, China's probably made a much better play at raw materials than the U.S. I mean, I don't know if the U.S. is planning to get back in the game and recolonize parts of the world to be like, we want your mines, we want this. It's like China's been doing that. So if the next, 3, 5, 10 years is all about raw materials and who has the most of them, I think the U.S. is going to get past pretty easily. But boy, oh boy, guess what we'll do? We'll have the dollar reserve currency. That's what we can do. We can also go to war. No winners. Anyway, enough about that. All right. This session went longer than expected, but we probably spent 10 or 15 minutes just doing audio. So sorry about the AV stuff in the earlier session. I'm glad we got it resolved. So here's the deal. Equities on Demand students will see you at 10 o'clock, and we'll wrap up the week. I had an assignment overnight with Snapchat, so we'll get that one fixed and take the small loss in the credit spread. Possibly getting CDE called away. CLF I rolled for some profit. We had a lot of active trading this week. Let me check in Telegram. Our notes this week were pretty active. Notes this week, just tracking everything. So never a dull moment in the markets, and head on a swivel. Okay. I will be heading out west for this weekend. I'll be joining you all Monday and Friday next week from the new office in Utah, and we'll chat then. Okay, if you have any questions for me, let me know. I appreciate the thumbs up. If you do that really quickly, just take 1 second, hit that thumbs up button for me, support the channel. Algorithm appreciates it. I appreciate it. And let's keep those subscribers coming in and pass it on. Free education. Check out the videos that I have in the channel. I'm doing live sessions Mondays and Fridays. I'll sprinkle in some bonus sessions. We'll probably do not a non-farm, but a U.S. Fed decision on November 2nd. We'll do a bonus decision there. Just kind of trade the fireworks together. And we'll see how we get through next week. I think the next week's probably going to be a big indecision week again. Watch the yields, watch the dollar, watch those highs and lows. They're still not breaking. If I don't have chart alarms going off, it's really just waiting and holding and then figuring out how to go from there. Okay. All right, everybody. Have a great weekend. And I'll see you back here on Monday, same time, same place, youtube.com/Chris Pulver. And I appreciate all the support. And take care. Thanks. Bye.